We're going to take a closer look now at just how this Russian wheat ban is affecting the markets with Sudakshina Unnikrishnan, commodities analyst from Barclays Capital. Thank you very much indeed for speaking to us. So the price of wheat has been surging, of course. Tell me a little bit more about the drivers of the price action for wheat. Of course, we were seeing there the situation in Russia, the drought, and now an export ban for 4 months.
Yeah, no, absolutely. I think the situation for wheat has changed very dramatically and very fast. If you go back to the start of this year, then the market was really pricing a very, very comfortable supply and demand balance. We were expected to have the third highest harvest on record for the 2010-2011 year. And if you look at key producers, the US, for example, then production has been rising pretty sharply. Over the recent weeks, of course, we've seen a very, very big turn in terms of how the market perceives fundamentals. Because in terms of the supply side, we've seen floods impacting acreage in Canada, which is also a key producer as well as exporter. We've also seen recent flooding taking place in Pakistan. But most importantly, the sort of market focus has been on the back of Black Sea producers, because this region has become very, very influential over recent years, both as a producer as well as an exporter. And a lot of this focus really is on Russia now. We've seen that, Russian domestic prices have been rising very, very sharply. You've seen that the big fear in the market was if we would see any export restrictions, the sort that we saw taking place in 2008 when we saw the big food crisis. And indeed, after yesterday's announcement, there is a lot of concern. Yeah.
I mean, tell me a little bit more about concern in the market about other countries following in Russia's footsteps and limiting exports.
Yeah, I think with regards to limiting exports, the real fear is that we could see its neighboring countries like Ukraine as well as Kazakhstan. Both countries have been impacted by drought as well. And I think if we did have any of these countries coming in and announcing any sort of export restriction, then really that would add a further fuel to this rally.
So how much of a rally could we see? How much of a further spike could we be looking at? Could we reach, what, $10 a bushel?
Well, I think $10 a bushel at current fundamentals looks unlikely. But if we were to see both countries coming out with export bans, if we were to see the drought continuing to worsen in Russia, then I think certainly another dollar from here looks quite plausible. So we could be hitting the sort of $9 per bushel level. But I mean, the key thing really to point out here is that it's not really that the world is very short of wheat. If you look at US production, if you look at global levels of inventories, then these are still at very, very ample and comfortable levels.
So given that global wheat stockpiles are fairly healthy, at what point will we see prices reflect those fundamentals and come down?
Yeah, I think all things being equal, if things go on the way they are at the moment, then I think we are likely to see a bit of a correction over coming months. And prices could then move back into the sort of $6 range. I think it's very, very unlikely, keeping in mind the recent downward revisions we've had to production, that we go back to trading wheat at $4.5, $5, which is the range that it's been for most of this year before this rally.
So to what extent might Russia's ban benefit rival producers, including the US, of course?
No, I mean, the US is likely to be one of the best sort of place to be able to pick up the slackening in terms of Russian exports. So the sort of vacuum left by Black Sea producers, and Russia in particular, is going to be a big beneficiary for Australia, for the US. And I'd say these two countries, as well as the EU, are best placed to be able to meet this shortfall.
Thanks very much indeed for your analysis. Appreciate it. Sudakshina Unnikrishnan, commodities analyst at Barclays Capital.